All right, hi everyone. Welcome to today's webinar series brought to you by IronFX, where we'll be covering breaking news and setups. I just want to make sure you guys can hear me loud and clear, and you can see my screen as well, which should show the first page of the presentation slides. All right, hi Frederick, good to see you. Do take note, we've got the chat windows and the Q&A windows open as well. So do not hesitate to drop your questions at any point during this webinar. All right, okay, I think we're good to go. All right, so as long as you guys can hear me and see my screen, all right, let's just kick things off. All right, so as usual, before we start, do take note of the risk warning that comes with trading margin, Forex, and CFDs. They carry a high level of risk and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Also, do take note that the information in this webinar should not be considered as investment advice or an investment recommendation, but is instead just educational material only. All right. Okay. So my name is Ketan Ramachandra. I'm an analyst here at Everest Fortune Group, where this webinar series is brought to you in a special partnership by IronFX and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. Okay. So here's the agenda for today. Right. So we'll be starting off with just taking a quick look at all the key events that are going to take place this week. Sorry, apologies for that. All right, just gonna set everything up. All right, okay. So right, okay, so we have a couple of key economic events coming up this week. All right, so tonight especially we've got US CPI data coming up. It's inflation data, right? And we've also got unemployment claims. And tomorrow we've got several speeches made by officials by the Federal Reserve, the ECB, and the Bank of England. All right, so what's coming up this evening? Right, so at 12:30 p.m. GMT time, we're going to have CPI data or consumer price index being released. This will be for the US. So on the chart here on my left shows the headline CPI reading on the inflation rate. And on the right side, we are seeing the core inflation rate. So these are the annualized inflation rate, or otherwise known as the year-over-year inflation rate. So as you can see, after retreating quite steadily for the last 12 months or so, headline CPI has started to increase over the last 2 months, right? So headline CPI, which is on an annualized basis year over year, has started to creep up. In July, it was 3.2%, and in August was 3.7%. Right. Okay. So the forecast for September's number, which is going to be released in a couple of hours, is likely going to indicate that headline CPI is going to come in at 3.6% year over year. Right. So although it's a little lower than the previous month's reading, so any reading that should match 3.6, or even if the reading comes in lower, is quite likely going to act as a bearish catalyst for the US dollar. So what this means is if the number comes in equal to 3.6% or lower, it means that inflation is still relatively under control and could continue to subside lower. So that would mean that the Federal Reserve doesn't need to be aggressive in its interest rate hikes direction, and then that would have a bearish impact on the value of the US dollar. So US dollar should fall. That of course means dollar index will fall, euro will fall, pound will fall, Aussie. Oh, sorry. If dollar index is falling, the euro should be rising, the pound should be rising, Aussie dollar should be rising, Kiwi dollar should be rising, and currency pairs such as dollar yen and dollar franc will be rising. Right. So we can also see core inflation rate retreating quite steadily. So that's positive news. So do take note of the CPI data that's coming up later this evening at 12:30 p.m. GMT time. So any reading that's going to be equal to 3.6% or lower is quite likely to act as a bearish catalyst for the US dollar. Conversely, if we do get a hot reading, that means we get 3.7% or and above. This is quite likely going to trigger a very strong bullish catalyst for the dollar index. So that means euro and pound will fall, dollar yen will rise, dollar franc will rise, and so on and so forth. All right. So that's how we can interpret today's data that's coming up at 12:30 p.m. GMT time. Following which, or well, rather not following which, at the same time as well, we have unemployment claims. Now, unemployment claims, what are these? Well, this is this data point tracks the number of American citizens who are filing for unemployment benefits every week, right? So if you have a number that's trending lower, that means there's less people filing for such benefits. So that means the labor market in the US is still robust, it's still resilient. But conversely, if you see unemployment claims starting to trend higher, that could potentially mean that some cracks are starting to appear in the labor market. So as we've seen over the last 7 to 8 weeks, not only have unemployment claims been trending lower, they've also come in lower than their forecast. So you can see the blue bar is the actual data for that particular week, and the orange bar is the forecast. So we can see for the last 7 to 8 weeks, not only have unemployment claims been trending lower, they've also come in lower than their forecast. So when we see data such as this usually acts as a bullish catalyst for the dollar index. So that means, as I said, bullish catalyst for dollar index. So euro currencies like the euro and pound will fall. However, over the last 2 weeks, we are starting to see unemployment claims start to edge higher, although they've still come in lower than the respective forecast over the last 2 weeks. This slight increase over the last 2 weeks could potentially signal further claims to rise, perhaps, right? So we have a forecast of 211,000 for this week, right? And the actual figure for last week was 207,000. So you can see the forecast is suggesting that this trend is increasing. Now, if we get a value that's greater than 211,000, that means there are more people filing for unemployment benefits. So that could potentially mean, that could potentially cause the dollar index to sell off. Because if more people are filing for unemployment benefits, that means the labor market is starting to show some cracks, and that means the Federal Reserve may hold back on interest rate hikes, and perhaps even early next year, or maybe end of this year, perhaps even start to hint at cutting rates, right? Okay, but if this figure comes in lower than 211,000, that means you have less people filing for claims. So this usually functions as a bullish catalyst for the dollar index. So once again, we have two key pieces of information coming up today. That is US inflation, CPI data, consumer price index at 12:30 p.m. GMT, 12:30 p.m. GMT. And we also have unemployment claims coming up at the same time. All right. Hi, Riaz. Glad you could have joined us as well. All right. Great to see you. And as I mentioned, we also have a few apologies for the spelling error typo, a few speeches by the various Fed officials. So let's switch over to Forex Factory and see what's going on here. All right, okay. So with Forex Factory today, we've got, okay, hang on. Just let me, just give me a sec. Apologies. All right, okay. Right, okay. So, so this is this, yeah. Right. Okay. So this is the economic calendar for this week, for Thursday and Friday. These are the key events that are coming up this week. So as we mentioned, 12:30 p.m. GMT coming up in a couple of hours. We've got CPI data and unemployment claims. Tomorrow, we've also got Bank of England Governor Andrew Bailey speaking. We've got ECB President Christine Lagarde, as well as FOC member, I believe it's Steve Harker, all speaking at various points in time throughout the day. So naturally, when you have such officials from the various central banks speaking, they, although the topics that they may take part in may not be covering monetary policy directly, but it is very possible that they could drop their insights and remarks with regards to the outlook for future monetary policy, and that could definitely impact the currency market. So with regards to Bank of England Governor Andrew Bailey, right, his words could have a major impact on the direction of the British pound. Of course, with ECB President Christine Lagarde, her words could impact the euro, and of course, FOMC member Harker's speech and remarks could, of course, impact the direction of the US dollar. So do take note of what's coming up tomorrow as well. All right. Hi, Michael. Great to see you. Okay. All right. With that, let's move over to, Trading View, right? Of course, Trading View, and then we can start to see the analysis for today. All right. Okay. So, right. Of course, we'll start off with the dollar index. Right. Okay. So here we are on the 4-hour time frame for the dollar index. Okay. Let's see. Just let me make sure I got everything right here. I can see you guys. Okay. Yep. Okay. So as you can see, okay, let's just get a little bit of perspective on how the dollar index has been trading. As you can see, over the last 12 weeks or so, we've had a very strong run up in the value of the dollar index. Of course, there have been strong pullbacks along the way. On 4th of August, yeah, 4th, well, what is this? Yep, 3rd and 4th. Oh, 4th was a holiday. I must be, oh no, 3rd and 4th August. Then of course on 28th to 30th August as well. Very strong pullback on 11th September, and another one on 28th and 29th as well. So you can see that the dollar has been in a very strong, but it was in a very strong bullish trend, bullish channel. But now, after reaching 107.35, price has peaked around here and made a swing high to drop lower. Right, so now dollar is falling and has been falling quite sharply over the past 5 trading days, and we can see it has found support around 105.60. Right, okay. So now that we have a better perspective of how the dollar has been trading over the last few months, or right, rather the last 8 months or so, we now look at the 4-hour time frame and try and identify where the major support and resistance levels are. All right, okay. So as you can see, price is currently trading about 105.70 after bouncing off this level here. So previously this was a pullback. This level here at 105.67, this was previously a support level, which price got broken quite cleanly early this morning today, right? Early this morning today, price cleanly broke below what was previously a strong pullback support level, but now it has started to rebound higher after touching 105.60, right? Roughly. Okay. So in terms of first support, second support, right? Okay. So because price has broken below this, what was originally our first support level, and now price has bounced off this level, we do see a case for a little pullback here, a pretty decent pullback support level. So this is not a very strong support level because we don't see any other major overlaps, and we also do not see any other Fibonacci retracements aligning with this level. So as of now, I'm going to highlight 105.55 as an intermediate support level for the dollar index. And of course, what was previously the second support at 105.35 will now be identified as the first support, right? We can see price running into resistance here in the middle of September. And then once price broke above it, we can see it found support on 21st September, for most parts of 21st September before bouncing higher. So you can see that this level here, this overlap level here at 105.37 has acted as a pretty strong support, resistance and support level in the past, which could now potentially offer another layer of support should price break below the intermediate support at 105.55. Right. And also, as we can see here, right, as we can also see, we've got the 127.2% Fibonacci extension level as well as the 100% Fibonacci projection level. Now, what are these levels going to be used for? They're being used to identify a potential support zone for the dollar index should price continue to fall lower, right? So this extension level, 127% extension level, was found by using a Fibonacci retracement, right? We started this retracement here from this swing low here on 29th of September, and we ended it here with the swing high here on the 3rd of October. So you can see that 127.2% Fibonacci retracement extension level lies at 105.19. Similarly, we've done a Fibonacci projection. The projection involves 3 points. So the starting point is here on the 3rd of October, going down to this swing low here on the 6th of October, and it ends with the swing high here, or this high here on the 9th of October. So we can see that the 100% Fibonacci, oh, let me see if there's any other levels. Perhaps let's just list all the levels so we can see. All right, so we had 61.8% previously, which lined up well with this pullback support level. And then now we have the 78.6% projection level, which lines up quite close to where the intermediate support level lies. So we're going to keep 78 and 100%. Right, so when we do that, we can see that how this pullback support level at 105.55 is now supported by the 78.6% Fibonacci projection level. So this could offer a potential support, a near-term support for price, which is why perhaps it bounced off this level today, right? A little bit earlier today, right? So we can see that the combination of the pullback support level here, as well as the 78.6% Fibonacci projection level, has helped to identify perhaps a pretty decent support level for price for the dollar index. All right, okay, now I'm going to get rid of this this, as I mentioned, this level here at 105.69 was previously identified as the first support level. Now that, of course, price has broken through it, naturally, we're going to get rid of it. We don't need it anymore. It's no longer valid. Right. Okay. And we can see that the first support is sort of supported by a confluence of Fibonacci levels. So what do we mean by a confluence of Fibonacci levels? It simply means there's more than one Fibonacci level at that particular price point or within that price zone. So it could be a combination of two Fibonacci retracements, or it could be a combination of Fibonacci retracement and an extension of Fibonacci retracement or projection. In this case, we've got a combination of a Fibonacci extension and a Fibonacci projection to give us this confluence. So confluence just means that this is going to potentially act as a very strong support level for price should it approach 105.20. Now, similarly, the opposite will apply as well if you're looking at resistance levels as well. Okay. Right. Okay. Now, with regards to the first resistance level, right, we see the first resistance level has been identified at 106.03. Why is that the case? Because we see price making a very significant bounce here back on 6th of October when price hit 106.02. It proceeded to bounce very strongly to go as high as 106.60. Right, and then after that, it pulled back again, finding support here briefly, finding support here on the 9th of October, retracing a little higher before finally falling through. So what was previously a strong pullback support level is now going to function as a strong pullback resistance level, right? Okay, so that's how we've identified the first resistance. Second resistance, similarly, this level here at 106.54 previously acted as a support level. So this was a pretty decent pullback support level in early October. Then once price broke underneath it, it found resistance several times on 6th of October and then again on 9th of October as well. Of course, we have this very strong, very large spike, a very long wick, but we can still see how price was still somewhat constrained over this period. So that is why we've identified 106.54 which is an overlap resistance level as the second resistance level, right? We can also see now that price is starting to climb higher. We can also run another Fibonacci retracement. We're going to start this retracement from this swing high here on the 3rd of October. Oh, hang on. Right, we're going to start with this swing high here on 3rd of October, and of course end with the swing low that took place early this morning at 12th of October. Let's see if any of the Fibonacci retracement levels line up. Right, okay, we can see 23.6% lined up quite close to where the first resistance is, so that's fine. We'll keep that. And perhaps we can keep 61% as well, just to give us an indication that this is where 61% lies. So we'll keep 23 and 61. Right, so this could be a potential resistance zone, first resistance zone for price for the dollar index. All right, okay, so this is what we have for the dollar index. So similarly, any bullish, if any of the data points today, later on today, in a couple hours, if they were to function as a bullish catalyst for the dollar index, then it's quite likely we could see dollar index break above, or not break above, 106, but push towards 106, right? It's quite likely it should at least break above 105.80 and potentially rise up towards 105.90 later today, should the data trigger a bullish, should the data function as a bullish catalyst for the dollar index. Right. Conversely, if the data turns out to be acting as a bearish catalyst for the dollar index, then of course, very likely we're going to see this intermediate support be broken today at 105.55, and price could likely find a drop all the way down towards 105.35. Okay, so that's how we can interpret or make use of the CPI data and unemployment data that's going to be coming up later this evening or later today, depending on your time zone, and how it could impact the direction of the dollar index with regards to the current support and resistance levels. All right. Okay, with that, we'll move on to the euro. All right, guys, if you have any requests at any point during the webinar, do not hesitate to ask me any questions, or if you have any requests for any analysis that you'd like to be done on any currency pair, commodities, or the indices, please let me know early. Do not wait till the end of the webinar, because we simply won't have time to go through the analysis together. So any requests, any questions, please drop them in the relevant chat box or the Q&A box as soon as possible, and I'll be more than happy to go through the analysis with you. All right, okay. Now let's move on to the euro. Right, so of course, with dollar index making a swing high on the 3rd of October and then proceeding to fall lower, naturally the euro is going to be rising during this period. So we saw the euro form a nice bottom here at about 104.55 or 104.50 before now to climb as high as 106, 1.0630. Right, it's run into a bit of resistance here at the first resistance level. First resistance level is identified at 1.0629. Why is that the case? Right, if you look at, or even if you go back as far as here, right, in middle of September, 14th September, and 21st September, all the way till till 25th of September, you can see that this level here at 1.0631 has acted as a strong pullback support level for price before the euro eventually broke underneath this level. So what previously functioned as a strong bullish support level is now going to act as a strong pullback resistance level, which is what we are seeing now, right? We saw this early this morning. We saw this a little bit on Wednesday as well, and at various points on Wednesday, early Wednesday morning. Or just to clarify, I'm on UTC time or GMT time, so do take note, I'm on UTC time or GMT time here. So yeah, so you can see multiple instances where price as recently as this week has run into resistance, right? So this is why we've identified 1.0631 as a key resistance level, right? What about the second resistance here? We can see that the second resistance here, back in 15th September, price running into a little bit of resistance. That when price broke above it, it found support from 19th September all the way to 20th September. So for a couple of days, it found support on this level before moving higher and then abruptly reversing to drop through this level. And then once again, price didn't break above this level. Price was constrained under 1.0674. So you can see multiple instances where price has reacted off 1.0674, be it as a resistance, support, and then resistance again. So this is a pretty strong overlap uh, resistance level for the euro. And not only that, we've also once again used the extension level, which we've used the 127% Fibonacci extension level. So this extension level was found by running the retracement from this swing high here on 29th of September and ending at the swing low here on 3rd of October, right? And we can see that this 127.2% Fibonacci retracement level lines up quite well with the pullback resistance here that took place on 21st and 22nd of October. So I'm going to highlight this as a zone as well. So we do have a zone of resistance where this for the second resistance rather than an absolute level. Okay, so that's the resistance covered. So let's look at first support. All right, now that price has made the swing high here today and started to pull back a little bit, we can also use another Fibonacci retracement. We're going to run this retracement from this swing low here on 3rd of October, going up to the swing high here on 12th of October. Let's pull up all the fibs and see if they line up with any of the levels that we have identified. All right. I guess we can sort of argue that 23.6% lines up pretty well because we can see the wicks of the candle as well as the body of the candle here. And we can also see 61.8% line up quite well with the second support. So we're going to keep 23 and 61. Right, and not only that, I would just like to highlight this as a zone as well rather than an absolute level. So this is going to be a support zone for the euro. So this support zone runs from 1.0594 all the way down to 1.0584. Similarly, we see a strong overlap support level here at 1.0526, price running into resistance in early October. And then after that, it found support on 9th of October, so earlier this week. Right, so we see another pretty decent overlap level at 1.0526, which also happens to align with the 61.8% Fibonacci retracement level. So that's how we've identified the second support. All right, okay, then moving on to the pound. Okay, so for the pound, let's see. Yeah. Okay, so to identify the resistance levels, we've used the extension levels again. We've used 127% and 161%. So once again, this Fibonacci retracement starts from this swing high here on 29th of September, ending with a swing low on 4th October. We can see how the 161. Oh, no wonder I missed. Yeah, it didn't capture the bottom of the wick. Yeah. All right. Okay. Yeah. So we can see how the extension levels line up pretty well with the pullback levels that were identified earlier. Right. So once again, rather than a zone, rather than an absolute level, we can also see that. Oh wait, that's fine. Yeah. So first resistance is at 1.2338. Second resistance is at 1.2418. Right, you can see a pretty decent case for a pullback resistance here for price, and then and also of course this is for now it is a small pullback resistance, and should price continue to fall lower, perhaps this would end up being a swing high resistance. Now for the first support, we do see price running into resistance here on 29th of September, making a swing high here. And then once price started to come up, it ran into resistance here again on 6th of October before finally breaking higher. So this was acting as a pretty significant pullback resistance level, which now could act as a potential pullback support level, right? So that is how we've identified the first support at 1.2259. Now, for the second support at 1.2176. Once again, we see a strong overlap level. We see price running into resistance here on the 4th of October, then finding a little bit of support on 5th October. And of course, after breaking lower and higher, it found support again on 9th of October. So you can see multiple instances where price has reacted off this level. So that's how we've identified it as a potential overlap, a significant overlap support at 1.2176. Once again, with price starting to pull back as we speak, we can probably do another Fibonacci retracement. We'll start the retracement from this swing low here, 4th October, going up to the swing high here on 11 October. Let's pull up all the fibs and see what we get. Right, we can see the 23.6% Fibonacci retracement lined up well with the first support, and we also see the 50% lined up quite well with the second support. So we'll keep 23 and 50. All right, so we got, let's zoom in a little bit. Right, okay. Right, okay. So now that we've zoomed in a little bit so you can see more clearly, these are the key support and resistance levels for the pound on the 4-hour time frame. All right, let's move on to dollar yen. Once again, before we zoom in, let's zoom out a little bit. All right. Okay, let's similarly here. All right, okay. So of course with dollar index rising strongly since mid-July, which is what we are seeing. We see this here as well. Right, since mid-July, you can see how strongly the dollar yen has risen. Since then, going from about as low as 137, what is this, 137.70 to as high as 149 recently, right? So you can see how strong of a move the dollar yen has made over the last 12 weeks as well. All right, now coming back to where price is currently trading, how did we identify some of these resistance and support levels? All right, perhaps let's just start with a clean slate, right? For this example, let's just start with a clean slate and we can do the analysis together. All right, right, of course, we can see price making the swing high here, right? So naturally, this would be one of the resistance levels. Let's just label this as red because if we zoom out a little bit, the last time price was trading around this levels was back in October, November of last year, or rather end of October, right? So almost 1 year ago, 52 weeks ago. So it's been coming back to this level where we could potentially run into resistance once more. Right, and also we can also see that price made ran into resistance here on 6th of October as well. So we can also highlight this level as another resistance level as well. Right. So with that, now that we can see, right, okay, so we can be quite confident now to say that, all right, this level at 149.41, we can label this as the first resistance because this was price made a pretty significant swing high resistance here. You can see price made a pretty significant swing here. And then on Wednesday, yesterday, it attempted to come close to this level again, but it seems to be rejected. And naturally, of course, the swing high here at the top of the wick would be the second resistance at 150.16. Now, what about support levels? Right, we can also see that this level here at 148.46 is a nice overlap as well. Right, we see price running into resistance here on 20th of September. And once price broke above it, you can argue that it found a little bit of support here on 29th of September. Then again on 5th October, various points in time in 5th October, and again on 9th of October. Right, so we can see multiple instances where price has bounced off this level. That gives us a fair, a good sense of confidence that this would be a potential support level for dollar yen. So that's why we're going to label this as the overlap support, as the first overlap support, as the first support for dollar yen, which is an overlap support, right? Overlap because we see running into resistance here. Then once price broke above it, support, right? So if you have resistance and support on either side of the level, it becomes an overlap. In this case, you only see price reacting off this level on one side. So in this case, it's just running into resistance. So this is what we would call a swing high resistance or a pullback resistance. All right. Now, what about the second support? Right, okay. For this, perhaps you can use the Fibonacci retracement tool. Right, I think we can start the retracement from this swing low here on 11 September, going up to the swing high on 3rd of October. We can see that the trend line captures the price structure very well. So that usually means that's a good sign. That's a good way to draw or it's usually an indication that we've drawn the Fibonacci retracement at the correct points, right? So if you have a starting point such as from this swing low and ending at the swing high, and you have the trend line capturing the price structure as well as this, then that means this is a this is one of the better, this is the correct way, this is one of the optimal ways that we have drawn the Fibonacci retracement, and that means that the potential retracement levels are going to could offer significant support. Right, so in this case, right, we can see 38% line up here. We can see price bouncing off 38% here on 29th of September. Then again here on 10th of October as well. So given that we also see a little bit of price action of 38%, so I would like to highlight it as a zone, right? The first support as a zone rather than an absolute level, because now we have the 38.2% Fibonacci retracement, perhaps suggesting that this is a pretty decent support level as well, along with the overlap at 148.35. Right. What about the second support? Right, we can see where the 61.8% Fibonacci retracement lies. We can see price running into resistance here in mid-September, and once price broke above it, it found support from 18th September all the way till 21st September, pretty much for that week before bouncing higher. So this is what we would call an overlap level, right? So price ran into resistance, broke above, then found support. So you have resistance on one side and support on the other side. So that makes this an overlap level. So in this case, this will be a key overlap level that lines up very well with the 61.8% Fibonacci retracement level. So that's why we're going to label this as a second support. And we can also see that this long wick here got sort of bounced off around this second support level as well, or bounced off around where the 61.8% Fibonacci retracement took place. Right, so you can see the combination of how the overlaps and retracement levels help us to identify key support for this chart. So we're going to keep 38 and 61%. Right, okay, so this is the analysis for dollar yen. Oh yeah, there's also an extension, I believe. Right, let's see if we do a retracement from this swing high 6th of October going down to this swing low on 9th of October. Let's look at the extension levels. 127 and 161 are the key extension levels. Right, where we've identified the first resistance here. So I think I'll just keep 127. And for the second resistance, I'll just highlight it as a zone as well. Right, so you can see the resistance zone for the second resistance starts from 149.90 all the way to 150.16. All right, is there anything else that we can try and look out for here? No, probably not. Okay, so these are the key levels for dollar yen. So similarly, if the economic data coming up today, inflation data and unemployment claims, if they both function as a bullish catalyst for the dollar index, naturally dollar yen is going to rise higher, and it could potentially come up to 149.40. Obviously, naturally, if the data comes out to be very negative for the dollar index, it's quite likely we're going to see dollar yen break under 149 and perhaps slide as low as 148.50. All right, so do take note of the levels and how the relevant economic data could impact the direction later on today. All right, then we can look at now. Let's cover gold and oil. Right, let's move on to oil. Let's touch on the commodities a little bit. Right, so similarly, with dollar rising strongly, right? So for those who may not be familiar, the value of the US dollar and gold prices have a inverse relationship, or what we call a negative correlation. So what that means is, most of the time, for most periods of time, when the value of the US dollar is rising, the price of gold is falling, as we see like in this scenario. And when the price of or the value of the US dollar is falling, usually the price of gold is rising, as we see here, right? But sometimes this negative correlation can break down, which is what happened this week, right? Because this week, over the weekend, there was the conflict in the Middle East, in Israel, that started over the weekend. So because of geopolitical tensions, geopolitical risk, there was a strong demand for safe haven assets when markets open on Monday morning. So what are the safe haven assets? They would be the US dollar, gold, sometimes the Swiss franc, as well as the Japanese yen. So these are some of the safe haven assets that we can uh, expect to see a lot of demand when such geopolitical events or risks play out. So that's what we are seeing. That's why the negative correlation between the value of the US dollar and gold actually broke down this week on Monday, right? But now, as we can see, with dollar index falling since let's see, where was it? Monday. Yeah, we had this. Yeah, so Monday, sorry, the correlation, the negative correlation just broke down on Monday itself, because that was the day Monday we had a case of both dollar index rising and also gold prices rising. So during on Monday, just for Monday alone, the negative correlation broke down, and we actually had a positive correlation between the value of the US dollar and gold prices. But then that correlation broke down, and once again the more natural negative correlation started to play out. So from Tuesday onwards, we see gold prices rising as the value of the dollar index started to fall again, right? So you can see at 10 October onwards, dollar value of the dollar index starts to fall, and we see gold prices continue to rise. So this is a negative correlation kicking back in. Right. Okay. So how did we identify these support levels and resistance levels for gold? Right. Okay. We used the Fibonacci retracement. Right. We started this retracement here from the swing high on 20th of September, and then we ended it with the swing low here on 6th of October. Right. And not only that, we also see a very strong pullback level here. Right. We can see price making a very significant swing bounce here on 18th of August, mid-August, right? So when price bounces off this level like this was previously identified as a major pullback support level or a swing low support level. And then once price broke underneath it, this level could now potentially function as a pullback resistance level, right? This level could function as a pullback resistance, which is at 1885, right? And we can also see that 1885 lines up pretty well with the 50% Fibonacci retracement, but this level was identified earlier this morning. But now, because price is broken above the 50% Fibonacci retracement and this little pullback resistance level here as well, we can get rid of the 50 and just keep 61 and perhaps 78 to give us an idea of where those. Okay, 60, 78 is just too far. We can just keep 61, and naturally we're going to get rid of this resistance zone as well now. Right. Similarly, for the second resistance, to identify the second resistance, once again, we see price making a very significant swing low here, right? Price falling quite aggressively, then finding support at 1900 to bounce strongly to go as high as 1950, pretty much. So once again, this was a very significant swing low, which was then used to identify a major pullback support level, which actually got taken out quite easily. So that is why but now we're going to use this level here to help us identify the potential second resistance at 1900. Now, similarly to the downside, we can see price running into a little bit of resistance here on 10th of October before breaking higher. So we can see that 1865 is a potential pullback support level. And similarly here, when price was rising strongly, it ran into a little bit of resistance at 1852 before finally going higher. And then it found support again on this level on 10th of October. So this is an overlap level here, right? We see resistance on 9th of October, and then we saw support on 10th of October. So we see price reacting off this level on either side. So that means this is now a pretty significant overlap support at 1852. All right, so that's what we have for gold. And of course, so once again, if we get bearish catalyst for the US dollar later this evening, that means gold prices are likely to go hit the first resistance. Similarly, if the data is going to function as a bullish catalyst for the dollar index, then naturally we might see the gold prices pull back and drop under 1880 at the very least later today. All right, so that's what we have for gold. Right now, let's look at oil, WTI oil. All right. So once again, the geopolitical risk that took place over the weekend caused oil prices to surge, right? Crude prices in general, both WTI and Brent futures jumped almost 3%, with WTI touching $86 per barrel on that day itself on Monday, right? But then price has started to pull back, and we can see the gap was actually closed earlier this morning, right? The gap has been, the gap has been closed, right? We just about closed the gap today, and it's bounced off this level. Right now, well, with Israel not being a key producer of oil, but because it's in that region where we have key players such as Saudi Arabia, Iran as well, big oil producing countries, there was concerns that the supply and production of oil from that region could be significantly disrupted. So hence, we saw this big spike in crude oil prices as markets opened on Monday morning or Sunday evening. But once the concerns surrounding oil supply and production started to dissipate, the more news came to light, and there was less risk to the supply chains or the supply paths for oil and there was also no impact on production facilities. That's when you could see oil prices start to pull back and close the gap. All right. Okay. So for first support level, clearly, of course, would be this level here at 81.06, which also lines up quite well with the 78.6% Fibonacci retracement level. First resistance is when price ran into failed to break above 85.10. Remember, price hit as high as $86 per barrel, but then pulled back quite sharply, and then price failed to break above 85.10. So that's why we've identified this level here as a pullback resistance level. And we can also see that the top of the spike aligns, or the top of the wick aligns well with the 38.2% Fibonacci retracement. So we're going to identify the first resistance as a zone rather than an absolute level. Similarly, for the second resistance here, we can see price making a pretty significant swing bounce here on 21st of September, and the second one here on 26th of September. Then similarly, when price broke underneath it, it made a small swing high resistance here before dropping lower. So you can see a pretty significant overlap level here, which is at 88.29, which is what we're using to identify the second resistance. And we also see that it aligns just under the 61.8% Fibonacci retracement level as well. Okay, second support, of course, no surprises to where the second support is. Once again, we see price making a very significant swing bounce here, right? Bouncing off this level on the 23rd of August, 24th of August to climb higher, right? So that's how we've identified the second support level for oil. All right, okay. We're coming close towards the end of today's webinar. So yeah, do not hesitate to drop me any questions right now or ask for any requests that you may have, right? So that gives us at least that gives us sufficient time to run through the analysis together. Otherwise, I'll just cover Aussie and Kiwi, and then we'll wrap it up. All right. Okay, so for the Aussie, right? So it's risen quite strongly since 3rd of October, right? Although it was pretty choppy here, but you can see the general trend has been up for the Aussie up till Tuesday, right? It ran into a pretty strong resistance around 64.50 and has failed to come close to this level again. So since Tuesday, price has somewhat ranged in between the first resistance and the first support levels, right? So we can see when we run the Fibonacci retracement here from this swing low of on 6th October, and we ended on 10th of October, we can see that the 38.2% and the 78.6% Fibonacci retracement levels line up with the first support and second support. Right, first support is an overlap level here at 63.94, and second support is this pullback support here at 63.47. Now, of course, to the upside, naturally 64.39 is going to be the pullback resistance here, where price failed to break above it on 10th of October. And second resistance is at 64.93, which when price made this significant swing high here back on 29th of September. Right, so these are the levels for the Aussie. What about the Kiwi? Right. Okay, I think this is a bit better. Yep, okay. So similarly for the Kiwi, you can see how the Aussie and the Kiwi generally have a very similar price structure. So if you've done the analysis for one pair, it's usually the analysis is pretty much the same for the second pair as well in terms of where the relative levels may lie. Right. So similarly, right, as you can see here, we have the 38.2% and the 61.8% Fibonacci retracement levels line up quite well with the identified first support, second support. Price is retreating sharply towards this first support here. So if you have been shorting the Kiwi since yesterday, this first support level between 559.90 is where you would be looking to at least start looking to start at least consider to start taking some profit off the table, right? Start taking money off the table, right? As you can see here, this is a pretty decent pullback support level for price, which also lines up close to the 38.2% Fibonacci retracement. So if you have been shorting the Kiwi since yesterday or early this morning today, do take note 59.90 would be one of the areas where you should start to consider to at least book some profits. All right, second support is here. All right, first resistance, no surprises to where the first resistance is. Right, we see price making a swing high, significant swing high resistance here on 29th of September. And once again, price has made a pretty significant swing high resistance here on, what is this, 3rd of October, 10th of October, sorry. So we have two swing high resistance here. So we would call this a multi-swing high resistance level at 60.48. Second resistance is this pullback that took place here on 9th of August as well as 10th of August. And we also have the 127% Fibonacci extension level acting as a second additional factor to the significance of the second resistance at 60.94. Right, so this extension was found by running this retracement from this swing high 29th of September, ending with a swing low on 3rd of October, and we get 127% Fibonacci extension to complement the pullback resistance at 60.95. All right, okay. So if there are no questions or analysis, I'm just going to launch a poll. Would truly appreciate if you guys can give your feedback. And do look out for all upcoming webinars by IronFX. And for those who may have missed the webinar or would like to watch a re-recording of this webinar, it will be uploaded onto their YouTube page in due time. So perhaps, if not by end of the week, on Friday evening, perhaps by Monday, this webinar would be up on their YouTube page. All right. Thanks everyone for tuning in today. Have a great trading week, and I'll catch all of you at the next session. Thank you.